Welcome to our discussion on marina and harbor development, focusing on surety requirements and marine insurance. Let's get into how these critical elements work together,
Yeah,
ensuring these complex projects succeed.
absolutely. There's a lot to unpack here. So, what exactly do surety requirements mean in this context?
Well, surety requirements essentially come in the form of bonds, bid bonds, performance bonds, payment bonds, and maintenance bonds that serve to guarantee that contractors fulfill contractual obligations.
Hmm.
They're like a safety net that protects all stakeholders during the development process.
That's neat, but don't you think sometimes the costs and paperwork involved in securing these bonds can be a bit, I don't know, burdensome for smaller operators?
You've got a point there. It can be
Yes.
intricate, but the guarantees they offer, especially in big projects like marinas, are indispensable. They ensure the project meets stringent compliance and regulatory standards.
And speaking of compliance, marine insurance seems to play an essential role in all this, right?
Exactly. It's like if surety bonds are the structural framework, then marine insurance is the guardian of the investments. It covers everything from physical damage with hull and machinery insurance to potential environmental liabilities through protection and indemnity and pollution liability insurance.
Yep.
This dual approach really bolsters risk mitigation.
So it's like a double safety belt, one for ensuring contract completion and another for protecting against unforeseen maritime perils.
Precisely. It's like having two layers of protection. On one hand, surety bonds, such as bid and performance bonds, ensure the contractor plays by the rules, and on the other, marine insurance shields assets and operations from hazards like collisions or environmental mishaps.
And the importance of conducting comprehensive risk assessments before choosing an insurance policy, it seems critical because every marina or harbor project is unique. Would you agree?
Mm, absolutely. It's like you've got to map out the specific risks based on location, scope, and even the operational profile of the project. These assessments inform not only the types of bonds needed, but also help in tailoring the insurance coverage appropriately.
It really highlights the necessity of partnering with experienced marine insurers, doesn't it? Because these experts can navigate the unique challenges of the maritime world.
Exactly. Experienced insurers bring that in depth knowledge, ensuring regulatory compliance and precise risk management.
Yeah.
They're essential in setting up a robust safety net throughout the project lifecycle.
I noticed, though, that while the article makes a strong case for both surety bonds and marine insurance, some might argue that it seems to duplicate coverage in some respects. What's your take on that?
That's a solid observation, and while it might feel redundant at first glance, each plays a distinct role. Bonds primarily guarantee project completion, whereas marine insurance protects tangible assets and mitigates operational risks. So they complement rather than duplicate each other,
Right?
creating a full circle safety approach.
Makes sense. Sort of like building a fortress with both a sturdy wall and a vigilant watchtower.
Exactly. It's like you need both to cover different types of threats in the maritime environment. Also, regular reviews and updates of these coverages are critical as the project evolves. That
Hmm.
ongoing collaboration among contractors, insurers, and regulatory bodies is key.
That kind of collaborative approach really seems like the best practice for keeping projects on course and minimizing surprises.
Definitely. And this balanced dual layer approach not only safeguards investments, but also ensures that the entire development process stays in line with regulations, which is crucial in our ever expanding coastal regions.
Well, it's clear that both surety bonds and marine insurance are indispensable. Their combined effort helps ensure that these projects not only get built, but are resilient in the face of risk.